You're welcome back to my channel. This is regulatory platform where we discuss issues that affect insurance business in Nigeria, and we focus on regulation and supervision of insurance business. In case you're joining us for the first time, my name is Dr. Sam Onyeka. You are welcome to my channel. Before we proceed, I would like to request you to please subscribe to this channel, and when you do, remember to turn on your notification bell. By so doing, you will get to know each time we upload new videos. Once again, thank you and welcome to my channel. All right, during the last episode, we discussed the sources of insurance regulation, and we identified, among others, legislation and delegated legislation. In case you are interested in watching that video, the link is already provided at the description box. So today, in this episode, we are discussing licensing regulation. Licensing regulation. Now, by licensing regulation, we mean the minimum standards prescribed by laws and regulations concerning entry into insurance industry. Remember, like we said at the beginning, insurance business is regulated business, and it's not for all commerce affair and all commerce affair. For you to be in insurance business where you are going to be allowed to collect premiums from people, invest the premiums, and pay claims subsequently, you must pass through some rigorous screening before you get a license. Now, there are quite a number of minimum requirements prescribed by regulations, and those are what I'm going to try to explain in this video. So I hope you remain here with us. All right, the first and most important requirement is that the applicant must have been registered as a limited liability company. This is because in most jurisdictions, individuals are not allowed to become insurers. There are two classes of limited liability companies. You can have a private limited liability company or public limited liability company, depending on how you want to source your capital, initial capital, and what you want to do. All right, now in Nigeria, you have to pass through the Corporate Affairs Commission, which registers companies in Nigeria. It takes between 2 weeks and 1 month to register a company if you have all the requirements. All right, now having done that, you proceed to the regulator. In Nigeria, the regulator is National Insurance Commission, and like I said during the last episode, it's a unified regulator, and it does regulation of both prudential and market conduct under one roof. Now, the regulator has a directorate that is in charge of licensing and regulations. Now, the directorate has issued guidance as to what is required if one wants to register an insurance company in Nigeria. So I'm going to briefly describe these requirements and make some comments as they apply to Nigeria. Now, the first major requirement is minimum capital. Minimum capital. For you to carry on insurance business, you must meet a certain minimum capital requirement. And why do we need minimum capital requirements? We need minimum capital because at the very first day of your operation, a claim may occur. And when you have not built any reserve, technical reserve in terms of insurance fund, and so you must have a means of settling claims. And what you do is to rely on the own funds, that is shareholders' fund, to be able to settle claim. And thereafter, you will make a replacement because minimum capital is supposed to be consistent and available. All right, now, what is the minimum capital requirement in Nigeria for registering insurance companies? Under the existing law, the Insurance Act 2003, depending on the nature of the company, whether it is life company or non-life or general insurance business, you are going to be required to have 3 billion if it is a general business, and 2 billion naira if it is for life business. And if your operation is reinsurance, then you will need 10 billion naira. But it's important to mention that the Insurance Act is going through a review, and the industry is also trying to go risk-based at the same time. So with the effect from the time the law will come into effect, the minimum capital requirement will now reflect risk-based approach. And so it's not going to be one size fits all anymore, and they will reflect the nature of operation of individual companies. The calculation, the formula, will be given by the regulator when the time comes. But for now, if you are registering an insurance company, you're going to meet the requirement of the existing law. And the minimum capital requirement for non-life is 3 billion, and for life is 2 billion, reinsurance is 10 billion. Now, meeting the minimum capital requirement is not enough in terms of depositing the money, whether at the central bank or anywhere you may be required to do so. It will be the requirement, the responsibility of the commission, the regulator in Nigeria, to verify your capital and, of course, trace the source if possible. This is to avoid corruption and money laundering and terrorism financing risks. So the regulator has the responsibility to ensure that the source of fund is clean and will be allowed in the insurance industry. All right, after meeting the minimum capital requirements, the regulator will want to see your business plan. Business plan becomes the second major requirement. And the business plan is simply a plan of the business you want to do, the offerings you are bringing, your products, if you like, and how you're going to design them and how you're going to distribute them. So the operator wants to know that you are going to couple it with, projection as to funds, as to premium that you want to or hope to realize within the first 1 year, second year, up to 5th year. This will help the commission to make up its mind whether you truly know what you are doing or not. You're also going to show the availability of staff with relevant capacities. You're going to show where you want to operate, whether you want to be in the community or you want to be in commercial cities. They want to see spread, as the case may be. So your business plan is important because it shows what you want to do and how you want to do it. So if you are not able to convince the commission that you are really prepared, then that may affect the decision of the commission as to whether you get the license or not. Now, beyond the business plan, the commission will want to also be sure that you have the right personnel ready, because insurance business is a technical business. You're going to do a lot of underwriting, and you're going to do a lot of reserving and claim considerations. You're also going to invest funds, so you will need to have experts in investment. You're going to have experts in underwriting, experts in reinsurance, experts in claims. So this category of staff must be available. And not just being available, they have to be competent and also have some good moral standing in the society. Now, of course, again, your directors will also pass the same test of fit and proper person. So who are the directors, who are going to be the directing mind of the company, who are going to take responsibility for the overseeing of the activities of the company and manage and relate with those who are going to manage the company on a day-to-day basis. So it's important that both the directors and senior management pass the fit and proper test requirements. The procedure for the fit and proper test requirements is available, and anyone can look at it if he wants, but it's an internal process anyway. All right, after the fit and proper persons test, we're also going to look at your presence. No company that is a shell company will be licensed for insurance business. By presence, we are looking at investments. If you have a building or you have rented one for the purpose of the business, so that we can trace you to somewhere. The regulator will not want to issue license to a portfolio company that would exceed the jurisdiction no sooner than it has a license, or if it accumulated funds. All right. There are other requirements for licensing, including this time around the products that you intend to offer. The products must be capable of adding value to the policyholders. The insurer will review your products, and in addition to issuing license, will also approve the products if they met the minimum requirements. And part of the minimum requirements for products includes basis for premium rating, and that will require some actuarial content. So the commission will want you to justify your rate for the premium as part of protection of the interest of the policy holders. Now, these are some of the major requirements that are involved with registering a new company, and I think you have taken notice of this. So let me just make this passing comment before we close on this episode. The Insurance Act is going through a review, like I mentioned, and the regulatory model that is going to be adopted in the new regime is going to be risk-based. And by risk-based, we are looking at regulation that is focused on risk mitigation and not risk avoidance, as with the case with the compliance supervision. And under the new regime, it may not be possible to register insurance companies as composites. So you either register as a life insurer or you register as a non-life insurer, but the composite operation will cease, just for you to know. So in sum, you need to be a limited liability company to apply for license in the first place, and you need to also meet certain minimum capital requirements, and then you must have a detailed business plan that will convince the regulator that you know what you want to do. And then, of course, the regulator must be sure that there are no money laundering threats with respect to the funds that you're bringing into the country, especially when the equity is coming from abroad. And then, of course, you must have capacities for underwriting claims, reinsurance, and all that. So you must have technical team that are competent and experienced for this matter. Meeting these requirements, you get the license. At the moment, there is no timeline, and that is one of the things that the new Insurance Act will achieve when it is done. For insurance now, the license is expected to be completed within a maximum period of 2 years. And if it relates to intermediaries, and that is brokers, agents, and loss adjusters, it must be issued within a period of 1 year. So this is how we come to the end of this episode, and I look forward to seeing you on the next episode, where we're going to discuss issues that are related to licensing regulations that are not covered in this episode. Until then, it's bye from my side. Thank you.